Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is December 5th, 2022, and I'm going to go over your three threes for the week. I'm going to go over our major asset classes, their performance for the week and year-to-date basis, and our top three favorite long-term asset classes, and how we are positioned on the equities and bonds on a short-term basis, and our top three market movers for the week. So let's jump on in.
Okay, let's go over the major asset classes, their performance on a week and year-to-date basis. On Friday, we received a stronger than expected November number of jobs. 263,000 jobs were created, which was higher than expected. This raised concerns again that the Fed was going to be aggressive and start tightening more. So that caused the market to sell off on Friday. However, we did recover and finish flat for the day. And so, but for the week, we saw the bonds were up 1 to 1.7, where the equities were up 1%, 2%. And the winner for the week was emerging markets because the US dollar was weak for the week. And we also had gold doing well, and Bitcoin was actually up for the week. But on a year-to-date basis, as we're slowly chipping away at some of these negative numbers that we've seen all year, we still have the US dollar and the commodities, your two biggest winners for the year. Gold is actually almost now flat, where we have Bitcoin being the biggest loser still on a year-to-date basis. All right, let's go over the top three asset classes on a long-term basis for December 5th, 2022. And there has been no change for this week. We still have T-bills, the dividend equities, and US dollars are top three. If we look back 1 year ago, we had the NASDAQ, S&P 500, and we had a little defense starting to come on the field in December. Long treasury bonds were in the top three. All right, let's go over our fixed income side, or the bonds, on a short-term basis. Through Friday, we had a year-to-date performance down 11%. So we've seen a lot of negative numbers throughout 2022. But if you remember 3-4 weeks ago, we started nibbling and buying selective bonds. And so far, so good. We've had a nice little return since we started that. And again, this is the second time this has happened this year. We shall see if this is a start of something better on the bond side, or if this is possibly going to roll right back over. But the prices have gone up because the yields have come down. We were as high as 4.3 on the 10-year. We are now sitting at 3.5 as of Friday. All right, let's go over the equities now on a short-term basis. And for the year, their performance, the S&P 500 is down 14.6. And if you remember, about 5-6 weeks ago, we started nibbling at selective equities. And so far, so good there. We've had a nice little rally in the market. This is the third one, as you can see from these charts. This one, the first one back in March, went up 12.5. The one in late summer went up 17.1, and now this one has gone up 10.9. So we shall see a broke resistance level right here. We've got to now get into the 4,100, 4,200 resistance zone and go above it before we feel really confident that there is probably a Santa Claus rally. Right now, we got a little one. We'd like to see that go into that area and go above it to finish out the year and bring down some of these negative numbers across the board. All right, let's go over the top three market movers for the week. On Monday, we have the Institute for Supply Management, the ISM number, and that gives us kind of a feel for the U.S. manufacturing and service sector. And the current estimates are for 53.5, with last month's being 54.4. So still above 50, but it looks like it possibly might trend down a little bit on Monday. So we shall see. On Friday, number two market mover will be the University of Michigan consumer sentiment. This will give us a gauge on what the confidence of the consumer feels out there, and it's projected to remain unchanged at 56.8. And again, you got to remember back in June it hit a record low of 50. So it still remains near all-time lows as high inflation, rising interest rates, and an economic slowdown still are impacting the U.S. consumer. So that we've got to keep an eye on the consumer sentiment and how they're feeling. On Friday, however, probably the biggest market mover will be the producer price index, or the PPI number, and the PPI inflation is often considered to be the bellwether of the consumer inflation. Okay. And so they're projected to have risen only 0.2 last month. And that's the same pace as the previous 2 months. And on an annual basis, it's a decline from 8% to 7.2. So that would be a positive. It's coming down still. And if we exclude food and energy, the projections are 5.9 versus a 6.7. So that would be positive. If we can get that for the end of the week this week, we could continue to see gains in the equity and the bond market. That's it for this week. Thank you for joining us. Our next update is Monday, December 12th. Continue to subscribe, follow, and like, and we shall see you next week. Have a great week trading.